RDMS.
So hello there, this is Kelvin Elisha Ziwa and welcome to Elisha FX once more. And today we'll be doing a trade breakdown of the Volatility 75 index. And so before we even get into it, you must know that the volatilities are only offered by the deriv, the broker's deriv. And so if you wish to trade the volatilities, you would have to open an account with deriv. And so this is not an ad, it's just for your information, for those who may be interested in the volatilities, because they are more stable and they also trade on weekends, just like the cryptocurrencies and the Bitcoin. So without further ado, let's get into it. So to start with, I'll note down my strategy. So the first thing I'll look at is the market structure, of course. So the market structure, whether it's an uptrend, downtrend, if there is a change in that. Secondly, we'll take a look at the order blocks. Let me see this. So you have to identify the order blocks. Then the third thing that we'll do is so the order block come together with the demand zones or the supply zones. So of course, after you would identify the order block, you would have automatically whether a demand zone or a supply zone. So in our case, we'll be looking for a supply zone or a demand zone. And lastly, like I always say, the market efficiency, breaking down or rather scaling down into the lower time frame in order to top-down analysis, in short. So the market efficiency on my part is just the top-down analysis, analyzing on different time frames in order to get a general market movement. So starting with the market structure, like I said, we'll be looking at how this volatility index has been so bearish over time, as you can see. Let me indicate by this. So it has been a very bearish movement. As you can see there, it was forming lower lows and lower highs. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. And then, as you can see here, it formed this high here, broke the previous low. So as you can see, there is a change here in the structure. So the change of structure, as I have indicated here, change of character rather. So there is a change of character where we were having lower lows and lower highs, and then we recently broke through the previous low, the previous high rather, and then we formed a higher high over there. So like I said, over time it has been so bearish, and then we have noticed there is a change of character at this point. So as you can see here, as I'm noting, you see we are having lower lows and lower highs, and then at this very point here, as you can see, the high was broken, and then we are forming now we formed a new high over there, and then we had the low here. And so what are we going to be looking for in the market? We'll be looking for where to make a buy, because the market has clearly showing us that there is a break of structure over this part here, and then you can see here that that's what I'm noting. So there is a break of structure at that point here, and then we have a new high that has been formed in the market. So looking at a point where we can enter the market as a buy in order to put our take profit at the new high that has been formed in the market. So like I said, this was the lower high. Yeah, this was the lower high, like I said, and then we have the lower lows over down there. This is our lower low, as you can see. So indicating where there was a break of structure, or the change of character rather, you can see here, this is where like the market broke. As you can see here, it was forming the break of structures on a downtrend, as you can see there. So there it was a downtrend, and the market was forming lower lows and lower highs, like I've indicated over there. And then at this point here, this is why we have a break of structure, BOS break of structure, yeah. And so I'll indicate this with these other weeklies. Over here we had another break of structure, as you can see. That was on the downside, as you are seeing this. So once the market is in movement, like I say, it's in a whether a bullish or bearish momentum, every time you break a previous high or a previous low, that will be called a break of structure, as long as you're still in that momentum. As I said, if it's a bullish, you will be looking for points at which the market has been breaking the previous high, and those will be your break of structures. Then at the point where the market completely changes direction, let's say it was in a bearish movement and then it has now become a bullish, that no longer becomes a break of structure, rather we'll call that a change of character. So yeah, this, instead of a break of structure here, we'll say change of character, as you can see there. So as you can see, it was on a downtrend, and then the previous lower high was taken out, meaning there is a completely change of character in the formation or in the structure of the market, and now we're expecting to have higher highs and higher lows, hence entering into the bullish trend from the bearish trend that was normally there. So yeah, looking at the second point that was there, which is the order blocks. Order blocks are just the blocks before a huge or momentum, huge movement or huge market movement. Yeah. So in our case, like I have indicated here, at this point here, that's why we had a huge market movement, and you can see that just before that there is this bearish candle there, that's the red candle, and that exactly down there is the order block. So the order block here, as you can see here, so this is the order block. Why is this the order block? Why not down there? Because the market hadn't yet broken the lower high that was formed, and so this movement down there isn't really relevant. But at this point where there is the order block here, as I have indicated, yeah, let me just change the color. As I have indicated, where there is the order block here, this is the movement that broke the previous high. So this movement that broke the previous high, as you can see, is where we can say like there is a momentum, the bullish momentum that went on and broke the previous market structure, which was the downtrend. And so that's the reason why we are getting this bearish candle there as our order block. And so, like I said, if you identify the order block, you automatically identify the demand zone or the supply zone. And since in our case here we're looking at a point at which the market is now becoming bullish, and so this will be our demand zone. So this is demand zone. So that same order block will determine the demand zone. Once the market approaches this demand zone, or the point at which this order block has been formed, that's why we'll be looking to enter the market into a buy, because the previous lower high has been broken, and now we have a new higher high, and so we're in a bullish trend. Now, where do you expect the market to turn and retrace from and continue with an uptrend? It's at the point at which we had the order block forming the demand zone. And so this is the previous high. Like I have seen, this here was the previous high, the new high that was formed. So I can even rename this as a higher high. So this is a higher high, a new high that was formed in the market, as you can see. And so we'll be looking at breaking the market will go all the way up there and break the new high that has been formed, which is the higher high there. That will confirm actually that we are now in an uptrend. But as you have seen, we already have an order block, we already have a demand zone, and so we are waiting for the market to just retest at this zone, at this block here, at this zone, and then we'll go all the way to the top until we break the what. So over down here, you can see that we even have the fair gap value. The fair gap value, like I explained in my previous videos, that is just a gap that has been left in the market. So like where there is a 3 candle formation, and then the first and the third candle, their wicks are not touching. That shows that there is an imbalance in the market, and so as a trader you'll be waiting for the market to retest those areas, in short. And so that confirms, you can see that the market has actually already entered our fair gap value zone. This is a zone where there is the gap, so it's already retesting the zone, but we are looking at buying at a point at which the market will touch this demand zone down here. So it's not only the fair gap value that we're interested in, but we want the market to touch the demand zone before we can enter a buy. So as you can see, so this is how the outlook is. And so if we were to enter a position, we'll enter at this very demand zone there that we have indicated, and then the take profit will be at the high that has been formed in the market, and the stop loss will be slightly lower down there where there is the order block, where the order block ends. So this can be like a 1-to-6. That's a big ratio actually that you have there. This is a big ratio that we have. So this is a movement we're expecting the market to hit this demand zone and go all the way to the top there and touch the break, actually not just touch but break the previous higher high that has been formed in the market. And so if you are someone who uses there are some people who use trend lines, and I may have verified with trend lines as well that this was going to work with the trend line. So as you can see, if I was to get a trend line like this down movement that the market has been making there, let me just show it with a trend line here. So this down movement there from this top all the way down until you can see that every time the market touched this line here that I've just written down, it bounced back, it went back down. As you can see, it touched this same line here. Let me just position it well. Yeah, so it touched this same line here several times, not just one, not just twice, not just 3 times, but more than that. So every time this market touched this line, it reacted, it went back down. As you can see, it went back down, it came all the way, it came up, touched, went down, touched, I think 2 times there, it went down. As you can see, it was a huge downfall, went up again, touched. It was forming lower lows and lower highs, in short, but without exceeding this line here that has been what. And then at this point, exactly at this point, this is where we had a break. The market broke this line that has been touched several times, and then it came back and retested it. So this is what we call the break and retest at this point exactly. So there is a break of a trend line, and then the market will come back to retest it before it continues with its movement. So as you can see here, let me just label this as break and retest. Yeah, so it's break and retest. Yeah, so this is the break and retest. So the market at this point broke through this trend line that has been where the market has been reacting to, and then immediately it tested this, it went all the way up, as you can see here, and it broke the previous high. And so this confirmed the change in the movement of the market. As it was in the downtrend, you can now say that okay, the market has now started going high, it has started buying, or the buyers are now in the market. And so yeah, so simply you can use different strategies. Personally, I don't use the trend lines because at times they're not accurate. So mostly I use the demand zones and the order blocks. I think they are more accurate, and yeah, it's a price action strategy, and so it's more accurate. And so yeah, this was all for today. I hope you learned something. Yeah, make sure you follow, you subscribe, and like the video, share. Thank you very much for your time. Peace.